Hello, my name is Katie St. Norris with St. Norris Wealth Management, and in this video we're going to talk about the difference between standard and itemized deductions and when to use one or the other. Let's get going. First of all, what is the standard deduction? Standard deduction, it's basically a flat amount you can deduct on your taxes, and the amount is based on your filing status. Because of the tax reform, the amount of standard deduction is actually almost doubled. If you see right here on the chart, 2017 standard deduction for a single filer was $6,350. For 2019 tax year, it's $12,200. For head of household, $18,350, $24,400 for married filing jointly, $12,200, the same as for single for married filing separately, and $24,400 for qualifying widow or widower. You can use standard deduction in 1 year and you can itemize in another year. It doesn't have to be continuous. It depends on your tax situation. But there are some people that cannot use standard deduction. Those people are a married couple that is filing separately and one of the spouses chooses to itemize. Then the other spouse actually forced to itemize also. Another one is a person who files a tax return for a period that is less than 12 months. And a third type is a person who was a non-resident alien or a dual status resident alien during the year. So let's just take a look at our Form 1040 for 2019 and see where we can find that standard deduction item. You can see right here on line number 9 the standard deduction or itemized, and you'll see the amounts listed on the side. Let's talk about what does it mean to itemize on your tax return. It means instead of using a flat predetermined amount like a standard deduction, you're going to go item by item through your allowed expenses and you total them and you deduct them on your tax return. So it makes sense to compare all of your items that you're planning on itemizing, total them, and compare to the amount of standard deduction and see if it makes sense for you to itemize this year. Let's just go through the most common items that you can itemize on your tax return. First of all, there are charitable contributions that are limited to 50% of your AGI, cash or non-cash donations. Next item, probably the biggest, is mortgage interest. You cannot deduct the full amount of your mortgage payments. You can deduct only your interest. You can deduct up to $750,000 of your mortgage, or up to $1 million if your loan was signed before December 15th of 2017. Next item is your state and local taxes or sale taxes. This also includes your property taxes, and the cap is at $10,000. Pay attention, if you're married and filing separately, your cap is at $5,000. Next item is your medical expenses. Now you can deduct up to 7.5% of your adjusted gross income. I would like to focus specifically on medical expenses. Let's take a look by using an example with a medical deduction. Let's say your AGI for 2019 is $45,000. So we multiply this amount by 0.75. So you will get $3,375, which is your threshold for medical expenses. And say during the 2019 you had out-of-pocket medical bills totaling $6,000. So it means that you can deduct on your tax return $2,625. Another big ticket item for medical expenses worth mentioning is actually adjustments for your house. Say you have problems walking up the stairs and you had to install a lift in your house worth $60,000. Can you deduct that expense? Yes, but not full $60,000. Let's just go through an example. Let's say you spend $60,000 on that lift for your house, and your house is worth $200,000. Get us some space here. And that elevator or lift increased the value of the house by $40,000, making it $240,000. The cost of the elevator, which is $60,000, minus the increase in the home value of that house, that's what you can deduct. So it's actually $20,000 deductible in your tax return. Now let's talk about the items that are no longer deductible as itemized deductions. No longer deductible are tax preparation fees, your union dues, safety deposit boxes, uniform expenses, and unreimbursed employee expenses, which are meals, entertainment, and travel. And since we're itemizing, let's take a look at our Schedule A. The box up top are medical and dental expenses. Section number 2 are taxes you're paying. Next one, interest you paid on your mortgage, followed by gift to your favorite charity, and your casualty and theft losses. That was a quick overview of your standard deduction and itemized deductions. Thank you for watching.